Hey traders, this is Ron Haidt at Market Tamer. Happy Tuesday. Hope you had a great day. As always, everything in this presentation is for educational purposes only. All right, we'll kick off here with the spiders down a buck, about 0.39%. We're still in this box, just like I said yesterday. Today, if I zoom in closer, was actually bearish engulfing, just almost reaffirming that, hey, this is still a bearish trend. I mean, yes, net since early August, we've gone nowhere, but all the price action is below the 50-day moving average. We can't get above it. So the sell-off, we're bouncing, we're consolidating. I mean, this was pretty brisk. S&P, the spiders at 300 to 282. You know, that's a quick almost 20-point drop, 200 S&P points. Now we're just digesting that. Please keep an eye on the 282.50 area. Again, I keep saying this. If we get a close below there, you know, one of these quick, sharp down moves could easily occur. The target would be initially here, and then, of course, if we break that low, then we'd be targeting all the way down here. But this still feels and looks heavy. All right, how about the diamonds? Down 0.5%, a little worse. Also bearish engulfing over the previous day. Watch 255 below there. We come down here. Bulls, you need to get above the 50-day. The Qs, down only 0.21%. They got up as high as the 20-day EMA, but still finished down. Watch, you know, you could say almost the most recent low from Friday, but I think it's really right around here, which is 180, and then we would be looking at something down towards 170. And then here's the IWM. This had the worst of the day, you know, over 3 times as bad as some of the other indexes, down 1.48%. Volume was stronger than yesterday, bearish engulfing over yesterday's action. It is right now, it actually is breaching the 145 area, albeit by 15 cents. But folks, below 145, there is nothing to stop it. There's no support in here. You're talking 1.25, the December 24th lows. If we go to MDY, it was down 1.15%, not quite as bad. But if I zoom in here, it too closed below the previous lows. Volume was lighter, but if it breaks 330, then you're talking about, I mean, there's a little hitch here at 295, but really it's back down to 285. If we look at not CLF, but XLF, this is the financials, down 0.6%. This is still also a bear flag, sell-off, flagpole, but the highs keep getting lower. The lows have been getting lower, but then we held on Friday of last week. This is not looking positive for the SPY at all. This is not it's looking heavy as well. Below 26 is not going to be good for the bulls on XLF or the broad market, in my opinion. And then if you look at the transport, similar situation, lower highs, lower lows. They held on Friday. We break 175, then it's back down here. So across the board, it's not looking very rosy right now for the bulls. How about gold, silver, and the miners? Gold is still breaking out. Remember, here was the June pop up on volume. It then just kept on running, it consolidated, and gold is still off and running. I would still consider a 20-day EMA, which is the red line, as an end-of-day trailing stop. If you try to look at upside targets, I'd have to bring in all the data. On GLD, we're now getting close to 150. Right in here, this is what would be considered the multi-year overhead supply. I think 150 would probably put a cap on it, by my guess, from a technical basis. If we get a burst up there, all these folks that bought in 2011, 2012, they're not going to be all that happy that they bought up there. They might start selling if they were still holding, and it just gets their money back. And we talk about that in other charts too, where overhead supply comes in. But right now on the daily chart, gold is bullish. It's also bullish on the monthly chart. If we come back in here to a 1-year daily, and we take a look at silver. Silver was up 3% today, gap and run. If I bring in 5 years worth of data, you can see how, you know, silver is nowhere near the trajectory that gold has gone on, but it's starting to get bullish here on the weeklies. We've taken out some previous highs. 1750 will be a little bit of an overhead supply area from back in late 2016, early 2017 twice. Then the target's up here. And then if we bring in the gold miners, just take a peek at them, they're challenging, you know, the target of what, 31 bucks. Once we started clearing some of these highs at 25, that was a target. You could say target achieved. We close above 31, then there's a couple lows here, but probably back up towards 50 would be the target. So they're still looking good, still looking bullish, but just I would consider, picking a stop and then using it in practice. If you're paper trading, 20-day EMA in red would be a great end of day trailing stop, in my opinion. And as always, everything is from a paper trading perspective. I always say that. All right, AAPL, which is Apple, down 1% today. It did hold the 50-day, interestingly enough. If it breaks the 50-day, we come back down here. It did bearish engulfing over the previous day. Here is BITA, which is BitAuto. Nice pop today on volume. We cleared the $12 area. There's an unfilled gap just about at 15. So once we get above 15, then we'd come back up here towards 18. This is a breakout. If I was bearish on this stock, today would put me on notice. The bears are no longer in control of the daily chart. Bulls have broken out, and they have the edge. Activision was up on today. The reports of subscriber numbers are increasing. The volume popped as well, 18.2 million shares. I don't really care what the number is. You can just see the line. The line is up there. Biggest volume since, going back to March. We also cleared the previous high back from the end of July, beginning of August. There still is another high right here, but this will be a breakout. I would consider the 20-day EMA in red as an end-of-day trailing stop. FOSL, this is the first time this stock has had back-to-back days above the 50-day, where the stock closed near the highs of the day. So if I was bearish on FOSL, I could no longer be technically bearish. By having back-to-back up days, it didn't happen here, it didn't happen here, and it didn't happen here. There were never 2 consecutive days back above the 50-day. That just happened. Is volume extraordinarily high? No, not based on the past year. But closing near the highs of the day, that is a trend changer.